All right, welcome everyone to our Multifamily Monday update with the Multifamily Investment Advisors. Hold on, just screwed up something. And what we try to do is to check in with briefly every week, Monday around noontime, just to give you a brief market update on what we're seeing in the investment community around Chicago, bring in updates as well as share different investment opportunities, and also give our membership or collective, the people that are here, an opportunity to discuss
around noontime, around Chicago,
what they're working on in their markets.
And updates.
So, what they're seeing. So, I want to start off by passing the ball over to Drew Heitzman, our Director of Market Analytics, and tell us what you're seeing on the capital markets, Drew, and maybe some other stats you're seeing in different neighborhoods around the city.
Sure. Thank you, Tony. Will you be able to pass me over the screen share capabilities?
There it is. It's working.
Okay. So seeing a significant drop in the 10-year yield over the past week. Last week I presented it was about the high of the week was 1.41, and now we're at 1.18, and this is due to the entire financial market is acting as if a significant economic slowdown is coming, and that's due to renewed mask and COVID mandates. We've seen that occur in Los Angeles thus far due to the Delta variant. This fear is causing analysts to lower real GDP estimates, which is lowering bond yields such as the 10-year lower. And this is a unique situation because just 2 months ago, the 10-year yield was at 1.7, and people were thinking that we were closer to seeing it hit 2% as opposed to 1%, which we are at now. So we're at 1.18 now, and look forward to keeping you guys updated in the upcoming weeks. Thank you, Tony.
Awesome. Thanks for sharing that, Drew. Yeah, there's a number of headwinds coming at multifamily owners on the investment front. Investor confidence is slowing a bit when you look at the capital markets and things like that as a result of mask mandates beginning to come back around. And we're seeing spikes. Initially, they were saying, hey, there's spikes in COVID in areas where vaccinations were low. But now they're seeing spikes in all 50 states. I think we're up 25% week over week nationwide. And I think we've gotten a little bit too relaxed. I know that I've been out moving around the city a bit and seeing, hey, I'm the only one here with a mask, and there's tons of people here. So hopefully members of our group, the members are here at the Multifamily Monday Update, don't have to wait until the mayor or the governor tells you to wear your mask when you're in public to protect yourself, right? We're also seeing some inflationary pressures, right? Earlier this year, we heard a lot of conversation around the price of lumber, right, rising. We're seeing gas prices tick up. And as all those things get more expensive, those pressures put a pressure on multifamily investments. One of the things, though, is that the multifamily is a good hedge against inflation, right? If you got a mixed-use property, you got retail on the floor, you got apartments upstairs, those rents tend to rise with the cost of goods and services increasing, right? They're looking at increasing minimum wage. Well, increasing minimum wage for McDonald's workers, that's awesome for McDonald's workers, right? But at the same time, really the cost of the hamburger is gonna be more expensive to make the hamburger. So the cost of that Big Mac is gonna be more. That's right? So as these things look, I think that a lot more people are looking to invest in commercial real estate to appreciate the investments that they've made over time. The recovery in Chicago is looking good. We're still not where we were pre-pandemic as far as sales volume. We're a long way off. 2020, we were down around $2 billion in a market that's typically around $2.6 to $2.9 billion in the Chicago market. The first quarter of 2021, I think we hit about somewhere between $350 million and $400 million in sales. Let's just call it $375 million in sales. Second quarter 2021, our sales volume, Chicagoland, was $500 million, which puts us right around the $900 million mark for the year at the halfway point, which is significantly less, right? We're typically $1.5 billion by that point, trending toward 2.6, 2.9 billion for it to close out the year. One of the reasons, right, that we're seeing that differential in pricing is there's been almost zero participation in the downtown central business district market. There haven't been any sales in the central business district, which typically is one of our largest contributors to our overall sales volume. But the good news is that the occupancy rates have rebounded downtown, and they're actually beginning to see rent growth. A year ago, they were making big concessions, saying, hey, please come down here, we'll give you 5 months free rent. Nobody was coming, right? Now, this is particularly multifamily. When you look at office and industrial retail, those kind of things, there's still a little bit of shifting going on. Investor confidence is still low because of the uncertainty around the reassessment and what impact that's going to make on property values. If your taxes increase significantly, your net operating income is going to go down significantly, especially in a market where rents are flat, right, and we're struggling for occupancies. Then that has a deleterious effect on your property value. Now, there are some guys that are speculating and hedging to see this is an opportunity to come in, but again, they're going to want a discount to come in, and the investors downtown and the owners downtown are in a wait and see mode rather than selling properties, even though they're at the period of their whole periods. We'll wait and see what happens. We'll give it an opportunity to come back. And that's the pushback and the significance of the mass mandates. Things are starting to pick up a bit, and we're seeing this bifurcation or this struggle. But what we were looking at first quarter is just looking like a direct K-shaped recovery, where one segment of the population, the recovery was robust, and another segment going straight down. We were hoping for more of a V-shaped recovery. That bottom leg of the K, if you will, has begun to round out. I had a conversation with Brandon Speck, one economist over at CoStar, about that, and we said, well, maybe it was a K, but maybe it was a cursive K, and the bottom leg is starting to loop around, and hopefully it'll go up and form an E or L or something like that as we go forward. So we are watching that. Some of the strong suits has been the suburban market, up above pre-pandemic levels as far as occupancy, rent, and sales volume, also price per unit sales. Southeast Lakefront in Chicago is doing very well as far as occupancy levels, and also seeing modest amount of rent growth, not much. But in this cycle, if you could just maintain rents or be above par, you're doing good when there are other neighborhoods and other communities have been going backwards, like Lakeview, Lincoln Park, some of the other markets, rents have went backwards over the last 12 months or so. But I can go on and on talking about the Chicago economics, the economic climate. I wanted to pass the ball to Kelly to see if you have any updates for us as far as investment opportunities or anything else you want to share with us today.
I do, Tony, and thank you for the intro. I do have an update on some investment opportunities with us with the Multifamily Investment Advisors. The first one I want to talk about today is located at 5228 South Blackstone. This is a rare opportunity to acquire a trophy wealth preservation asset. It's a mixed-use property in downtown Hyde Park. It's a 40-unit building with strong long-term retail tenants. This does include a long-term national tenant in Boston market. So definitely reach out to us for more information on that asset. And next in line that I'm going to discuss is in the 100-unit count range. We have an opportunity to pick up a 114-unit Southside portfolio located in the Brainerd and Chatham neighborhoods. This has a low per unit price of less than $60,000 per unit. These combined portfolios offer an opportunity to pick up a critical mass of assets within a few miles of each other with great cash flow from day one. So for more information on these and other opportunities that we have available, reach out to the Multifamily Investment Advisors. You can reach us on our website, and do make sure to visit our website. It's www.chicagomultifamilyinvestments.com. You can also email us at investment@kwcommercial.com. And then our telephone number, 312-863-8990. And I will be posting all of these contact methods in the chat. Be sure to reach out to us. Thank you, Tony.
Thanks, Kelly. Yeah, great information. Yeah, that opportunity at 5228 Blackstone, awesome. Downtown Hyde Park, landmark building. Everyone knows the Boston market, corner of 53rd and Blackstone, 1 block off of Harper Court. And an excellent opportunity for wealth preservation or even a legacy play. The most common question we're getting from owners when they call investors is, hey, why are they selling that, right? So I think it gives you an opportunity. A lot of times these deals trade the background, behind the scenes, where everybody doesn't get access to acquire an asset like this. Multifamily team is providing an opportunity. If you know somebody that's operating in this space, please share contact information with them. We'd love to help to get investors in the game and even partner with realtors that don't get an opportunity to work the buy side on deals like you never see them, right? They don't, you find out, hey, that deal sold, right? So if you have investors that are looking to get into the Chicago market, we have inventory. Kelly talked about another 100-unit portfolio, West Chatham and Brainerd. Nice communities, well-kept assets, strong turnkey, where you can turn the key and begin collecting money day one. Also, there's opportunity for growth and value add, light value add. You don't have to do a whole lot, just do a little bit as the units turn over to push up your net operating income. Thanks for sharing that. Cody, do you got anything you want to share with us today?
Absolutely. I wanted to share how easy it is to apply for Chicago's ADU Pilot Zone program, as well as touch on some ways to force appreciation in your assets and buildings. If I have screen share, wonderful. All right. So to begin here, I have 2 great ways to force a little bit of appreciation in your buildings and assets. One would be the ADU Pilot Zone I just mentioned, and then 2, advertising or equipment leasing, right? So cell phone companies have been paying pretty substantial amounts of money to put up their new 5G towers as they're starting to implement that over America. And with these, there needs to be more units in a smaller amount of space than the original 4G cell phone towers. So to find out if you can add another revenue stream to an existing building may be worth it to boost the overall value of your asset, right? Which is why we do what we do. The other way to force appreciation that I'd like to talk about is the ADU Pilot Zone. Chicago has pushed 5 pilot areas, as we can see right here, that they're allowing accessory dwelling units coach houses, as long as they meet current standards, they are all for it. It's creating affordable housing, which is solving a problem that Chicago is desperately trying to solve right now. And without further ado, super simple sign up. Chicago made it really nice. Chicago's website made it really nice and easy to one, get all the information that we have on ADU pilot zones right here. At the very bottom is just a click to an application link. It's we've all filled out applications online. It's not difficult. There's 3 pages to it, and then Chicago gets back to you at the speed at which Chicago communicates with us. So extremely easy to do. I will post this this application or this application link in the chat. I would definitely recommend it if your buildings fall into the pilot program zones. If you would like to check, again, this link right here pulls up immediately exactly where the zone is at. And yes, so that's all I've got for today. Thank you, Tony, and I will give this back to you.
Awesome. Thanks for sharing, Cody. Yeah, Chicago multifamilyinvestments.com. We'll have a link to and more information on the ADU pilot zones under resources. Also reach out to Cody. He's talking to 5G and cell phone providers for spaces where they're looking to add units to your rooftop, right? I was talking to an owner that has an affordable deal. He's like, hey, it's always going to be the number of units, and it's always going to be the number of bedrooms and baths. That's not going to change. But if I do some things in some areas, like put a vending machine in my living room, maybe I can increase cash flow a little bit, right? If I can satellite, if I can put cell phone towers on the roof, or I think what they're doing is the solar panels, right, to pull down the cost of the common area expenses with the electric bill. Anything you can do to kind of make the buildings perform better and cash flow a little bit better, especially in this climate, is worth the conversation, right? And if you want to have that conversation, definitely reach out to anybody on the Multifamily Investment Advisors team, and we'll be more than happy to share information and point you in the right direction. We also have surveys on each neighborhood. What's happening? I gave a kind of a survey view of, hey, rents are growing, occupancies are increasing. Here's the price per unit for the city and suburbs, but we have this on particular neighborhoods in the city. If you have a property in South Shore or East Woodlawn or Lakeview or Lincoln Park, we can give you information on that neighborhood and even down to a particular parcel or micro market within that neighborhood relatively easy. But you only have to do one thing. We only ask you to do one thing. It's just ask for the information, and we'll be more than happy to share it with you. So that's what we have this week for our Multifamily Monday update. Thanks for tuning in, and we'll see you next Monday at noon. Thanks. Bye now.